Alibaba's shares have soared over 10% this week on the back of a story that suggests that delisting might be off the table. And that's what I want to quickly cover in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in that chat. You're watching More Money. Let's get it. What's up, guys, and welcome back to the channel, where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into this one, because this is breaking news. You can see here, Alibaba's shares are up 11.25%, especially surging today, where they surged around 8%. And so what's happening? Well, you can see from this headline on the Wall Street Journal that the US and China are nearing a deal to allow audit inspection of New York listed Chinese companies. And this is kind of what I was talking about for a long time, and on many videos that I've produced on this channel, that I do believe that they would work out a deal. Now, what are the sort of specifics here? Well, you can see that the thing that you got to be careful of is that this is being reported by people that are familiar with the matter. So just take that with a grain of salt. However, I will explain in this video why I do believe that you can trust the news that's coming out here. And so the US and China are nearing an agreement that would allow American accounting regulators to fly out to Hong Kong to inspect the records of Chinese companies. And so what's happening right now is that securities regulators in Beijing are making efforts right now to transfer records to Hong Kong from mainland China so that US regulators can fly to Hong Kong and inspect those records. The Chinese Security Regulatory Commission recently informed some accounting firms and companies about the plan. And so that's why I believe that there's more to this than news coming from just unnamed sources. There seems to be more credibility here. And it seems as though US accounting inspectors could arrive in Hong Kong as soon as next month. Now, Erica Williams, who's the chair of the PCAOB, did tell the Wall Street Journal that the U.S. accounting inspectors and investigators were prepared to travel to inspect Chinese company audit working papers when the agreement was in place. And so they're ready to go. So as soon as this agreement is in place, they're going to go. And I do believe that this is going to get done. And it's crazy how much this story has turned over just the last around 8 months or so. Remember what was being reported just about a year ago? This was reported in the Wall Street Journal, where it was saying that the CCP, although they already long maintained tight control over information, their efforts to sort of keep that information under wraps intensified under Xi Jinping, their current leader of the CCP party. And it's not like the US regulators are unwarranted for asking for access to these audit records. It's the same rule for all companies. US listed entities do go under PCAOB audits. In fact, Canadian listed companies that have dual listings in the US also have to adhere to PCAOB standards. And in fact, I was actually involved in audits that were regulated or reviewed by the PCAOB. And so why does this matter? Well, remember, guys, that Chinese companies are not immune from fraud. So remember that Luckin Coffee just a couple years ago agreed to pay $180 million to settle accounting fraud charges. And so this is what the US regulators are trying to go after and make sure that everybody plays by the same rules. So what exactly does this mean right now? Well, nothing, because my position has largely been the same. I did believe that the regulators would fix this, and I'm still a major investor in Alibaba. In fact, I recently doubled down on it. But before I go into my valuation, what I want to show you guys is how I'm valuing Alibaba. And effectively what I'm doing is, you can go through each of these segments and see exactly how I'm growing revenue, but effectively what I'm trying to say is that with an overly conservative segment revenue growth modeling structure, which I'm using, I still have to concede that Alibaba is expected to grow revenues at a rate of at least 10% over the next 10 years, assuming that things operate regularly. And of course, if there's a huge delevering, if there's huge issues in China, of course Alibaba could get impacted. But as it stands right now, I do believe that the company should grow revenues at a rate of approximately 10% a year in an environment where every company is not going down because of an economic collapse. And before I go into the valuation, I do want you guys to note that approximately 80% of the viewers of this channel are not subscribed. So guys, if you have an opportunity, please subscribe to the channel. Okay, now let's get into the valuation. You can see that my free cash flow per share valuation is net of a forecasted stock-based compensation. And so that's something that I don't see a lot of YouTubers doing, but I think it's important when you value companies based on free cash flow. And so I'm using a terminal multiple of 20 times earnings. And based on that, I believe that the company's worth approximately $300 per share. and compare that with their current share price of approximately $99 per share or 100 even, they're trading at a third of their valuation. Now, how do you get access to that Alibaba model? Well, you can get access to that at the lower tier of the Patreon level. And if you want to join us for an epic live presentation every month, you can join us at the higher tier. Now, something that's going under the radar right now, which could impact Alibaba, is that I do believe that the CCP just offered a band-aid solution for their property crisis. And I actually made a video on it, and you can get to that video right here.